Hey, it's Rav, and welcome to the Everyday Investor, the hottest real estate investment show in the world. That's right, I said it. I don't care who knows it. We've got a great show lined up. We're going to talk about how to invest in the condominium market. My guest co-host is real estate investing expert and teacher Brian Persaud. We also have on the show Sonia, who's made over 30% in her first year investing in condos, as well as Denny, who has made over 30% investing in condos in his first year. You don't want to go anywhere. This show is going to be great. Let's get it started. Make sure you got your paper, your pencil, your calculator, all that kind of good stuff, because we're going to learn how to make money investing in the condominium market. Remember, you always want to ask 4 questions whenever you're introduced to an investment opportunity. Number 1, what is the return on my investment? Number 2, when do I get that return on investment? Number 3, what is the minimum cash amount needed? And number 4, what is the risk in the worst case scenario? Like I said, my guest co-host, Brian Persaud. Brian, it's great to have you on the show.
Thank you so much.
Listen, it's always a pleasure to be nurtured by you. For those that don't know you, you've been investing in real estate for a long time, as young as you look.
Yeah.
You've been teaching, you write books, all that kind of good stuff. How's life been, and what's happening with the market? It's still a boom.
It is nuts right now. It's the most nuts it's ever been probably in history of Toronto. And the reason why, we're a global city now. We are officially part of the party with France and Paris, New York, London, Hong Kong. Yeah. We're officially part of the party now. And
are you're just saying that? I mean, that's what people say, or is there actually a designation that makes us, a first world city? I
mean, we're seeing all these surveys coming out. Toronto's number 1, Toronto's number 2, Canada's number 3, number 1 in the world. And I guess it's starting to get out there. I mean, every publication that measures economic activities in cities is saying we're awesome. So it's starting to get out there. We have a good brand now.
Yeah. No, I read a couple weeks ago that we're the number 1 diversified city in the world. And also, year after year, we're in the top 10 cities, the most livable cities, quality of life.
I mean, we're in the top 3, actually, top 2.
Is that right?
Absolutely. Yeah. I mean, the thing that we have going down for us is traffic and weather. If it wasn't for those 2 things, we'd be number 1 by far.
Traffic and weather.
Yeah.
Did you get a good parking spot on the way
here?
Oh
my God, I was going up and down for about a half hour. This is a busy place here.
Of course, it's Rogers TV. What do you expect? Brian, again, we're going to learn how to make money investing in the condominium market.
Absolutely.
Which is very interesting, the condominium market. And I look forward to your thoughts there, as well as Sonia's going to be on the show, Denny's going to be on the show, just everyday people making money in real estate. But you have made a lot of money in real estate, but it didn't always start that way. Give us a little bit of your history of how you got involved. And it wasn't always, just bright skies and the wonderful smell of roses. There's a lot of trial and error, and now you want to be able to give back, and that's why you teach so much.
I mean, when someone comes out, I want to invest in real estate, my heart almost goes out to them. Like, you don't know the journey that you have to go on in order to become good and get to the light at the end of the tunnel. Yeah. So I started out 3rd year university. I'm there and I'm taking biophysics. Why biophysics? Because my dad wants me to become a doctor.
That's right.
So I'm there, and Indian people.
Indian father wants
Indian
his son to become a doctor.
Yeah,
imagine that.
I imagine that.
Very
totally
good.
cliche.
Yes.
So I'm there and I'm in my physics classes, and I'm like, I have nothing in common with these people. And because of that, my grades started to tank. And I'm like, I really don't want to do this, because, your heart's not into it. So I really had a crisis there. What am I going to do with my life? I don't want to become a doctor. This is what my dad has been instilling in me from day 1. So I used to go to chapters a lot, taking a break from studying or finding an excuse not to study. Yeah. Came across a book, Rich Dad, Poor Dad.
Rich Dad, Poor Dad, Robert Kiyosaki.
Robert Kiyosaki. Yeah. I mean, it was an eye-opening book. It doesn't really go into details, but it's really a paradigm-shifting book. And they said, you know what, the goal in life should be to invest in stuff that earns you passive income, so you become financially free and enjoy the life that you want.
Passive income meaning you don't have to do anything, but money just kind of feeds the family.
And what is the only way that someone like myself could get passive income? It's real estate. I mean, back then you could do 5% down, 0% down on investment properties. You could get as many as you want with going to different banks. The rules weren't as tight. Yeah. So 3rd year in university, I got my parents to co-sign it, and I bought a property. And get this, I'm making $1,000 a month. I'm like living large as a student, getting $1,000. I'm financially free as a student, essentially, right?
Yeah.
Until
and what's funny is that your dad co-signed.
Yeah, my dad co-signed. Yes. So I mean, I didn't have a job. I'm a student. He was working, so he was able to get me the mortgage. So I'm going. Things are going smooth. Everything else. You make $1,000 a month cash flow on a property, and the only way you could do that on essentially no money down property is by having an illegal triplex.
An illegal.
Illegal.
Okay.
So Brampton does not like that, and especially neighbors that complain.
Was that where your first property was?
Yeah, first property. Because back in the day, I mean, you could get a property for under $200,000, and it would make that kind of money.
Okay.
So I get that. Neighbors start complaining. There's all this garbage. The city comes in. Tenants start complaining to the city. The city comes in, and they shut me down.
Wow.
So I have a property was plus $1,000 a month. They're telling me to get rid of the basement tenant, do all this work, putting the fear of death into me, and I'm negative $500 a month while still in university.
In university.
Yeah.
You're negative $6,000 a year.
Exactly.
And you're in university. And your dad co-signed.
And my dad co-signed. So I'm coming up with this money. Before I was bawling, going on trips, talking to girls, hey, I got this property, getting some more properties, and then that happened. So I was dead broke, and I had to retrofit that property so it could kind of fit the city building code and everything else.
Yeah.
And on a shoestring budget, turned it around, was able to invest and get a couple more properties in different places.
Well, listen, I look forward to more stories, as we continue the show. We're talking to my good friend, Brian Persaud. We're going to learn how to make money investing in condos. You don't want to go anywhere. The Everyday Investor continues in a moment. Thanks for watching. Whenever you're considering to invest in real estate, always ask the 4 questions to start. Number 1, what's the return on investment? Number 2, when do I get that return along with the money I put in? And number 3, what is the minimum cash amount needed? Number 4, what is the risk, the worst case scenario? Hey, it's Rav. Welcome back to the Everyday Investor. I'm with my good friend Brian Persaud. He's co-hosting today. He's an expert teacher and real estate investor. But right now, we're going to the mortgage expert extraordinaire, Carmen Caponero's on the phone. Hello, Carmen.
Hello, Rav.
It's great to have your voice. It's better when you're in person. I think you're coming in. You're coming in a couple of weeks. That's always great. Carmen, we're learning how to make money investing in the condominium market. Okay. And there's people out there that really just want to maximize cash flow. What would be your advice in terms of paying the least amount of money on a monthly basis? What are some strategies there that we could do?
Well, evidently it's the banks, and the rates are extremely low right now.
Yeah.
My recommendation would be potentially a variable rate. Depends on how long they're holding the asset. You could do a variable rate at around 2.1 to 2.2%. If you are getting 80% loan to value with an institution, you can still have a 35-year amortization, which really works with bringing down the cost of the monthly payment. So if I'm providing more cash flow.
So if I'm putting 20% down on a property, then you would suggest put the 20% down, go variable, and stretch out the amortization, meaning the amount of time it takes to pay that off. If I wanted to pay it off, not that most investors want to do that, stretch that out, and we can go as long as 35 years right now.
Yeah, I would borrow the bank's money as long as you can. 35-year AMs are beautiful.
Okay.
And they're still available. So if you are purchasing a property and you're getting CMHC, it's an insured mortgage.
Yep.
The maximum amortization available is a 25 years. So that means anybody that goes in with 90, 95%, 85%, if they get 85% financing or 90 or 95, and they have to come in with 5, 10, or 15, they're only allowed to get up to 25-year AM.
Okay, but if I put 20% down, then I can get the 35, which really is, as of today, that's really what an investor needs right now for an investment property is 20% down, correct?
20%, yeah, for the most part.
Okay.
On rentals.
Okay, Carmen,
so variable, 35 years, beautiful.
Wonderful. Thank you so much.
Okay, thank you.
Thanks.
Okay, bye-bye.
And that's kind of, there's different strategies, Brian, investing in real estate. A lot of people, they want cash flow.
Yeah.
There's a lot of people that say cash flow is good, but it's not going to allow me to quit my day job. So I want someone to pay down my mortgage. And if I buy condominium in Toronto, then that asset's just going to increase in value. And so I want to make sure that not to speculate, but to do my due diligence, to do my research, and it will just go up in price.
You know, I think you have to look at not only the asset, but also your personal situation. There's like a lot of wealthy Jewish families that just want to pay down their mortgage on their existing portfolio. So going with a lower amortization to speed things up is going to be what they want.
Yeah.
But if you're just starting out, I mean, you don't have the most highest paying job. You want to be able to get as many properties as possible, that cash flow that'll go up, so you could ride that wave and be able to get a couple more. So in 10, 15, 20 years, you focus on paying it down as aggressively as possible.
You know, when it comes to condominiums, I love doing this show, investing in condos, because it's really a very misunderstood, investment class, if you will. You know, a lot of people see the cranes in the skies, and you've taught me, but Rav, when you see all those cranes, that's for product that's already been sold.
Yes.
Right? Talk to us a little bit about that when someone says, yeah, but Brian, Rav, isn't the condo market oversaturated? What would you say?
Are people still kind of talking about that?
Well, absolutely, because they see so many cranes.
You know what? I think the biggest reason why, if you look, yes, we have a lot of cranes, but we don't have any more Markhams, Bramptons, and Miltons around. So if we look at the amount of homes that are being delivered, just the overall numbers, because we don't have those Markhams, we don't have those Bramptons, the land's gone, we're not producing houses anymore. So condos have to make that up. And you look at the overall numbers for every year, how many new homes are being added to the market.
Well, I think you brought some charts there,
yeah,
right?
we're actually...
Let's take a look at what you brought in terms of, so this here.
Yeah, this is by Urbanation.
Yeah.
So have you buy a used car, you're thinking you're buying a used car because it's going to be a lot cheaper than a new car.
Yeah.
But this graph is saying today, as in 2016 Q1, a new condo on average is cheaper than a resale condo. So old is more expensive than
today.
new.
Okay, so the blue line there represents new.
Yes.
The gray line represents the resale.
Resale.
And so we go to where we are on the extreme right side there.
Yes.
And you're saying that new is even just a pinch cheaper.
Yeah, so throughout almost the entire year that this graph's being used, we're seeing new is always more. And you think that you buy a car, you buy a new house and everything else, but we're actually seeing condos, new condos, pre-construction condos that are not going to be built for 3-4 years, on average, on a price per square foot basis, are less.
Okay. What else? You brought in another graph that talks about, just market values and so on and so forth. Maybe we can bring that up. So what's this talking about?
So this is saying that, who's going to want to buy a condo for $600,000 or $700,000? Actually, there's going to be a lot of people. If we look at the growth rates of sales, $500,000 to $700,000 is growing by far over and above everyone else.
Wow.
And the reason why is this. What's the average price of a house?
That's right.
Like a single detached house.
Yeah.
It's over $1 million. So people are upsizing. They can't afford to buy a house. They have to buy a condo. And if they want a 2 or 3 bedroom condo, it's going to have to be in that price range. So this is showing finally that people are buying condos that are a safe investment because just houses are out of reach to most people.
And it's their first purchase even.
Yeah.
Right? I mean, it's their first purchase because it's actually easier to get into the condo market than it is to buy a house even in the suburbs.
Yeah, and Toronto's finally growing up where people are realizing that living in high rises is going to be a way of life. If you want to be away from traffic and everything else and live close to work, it's a reality. You're going to have to go to a condo.
You have to go to a condo. Okay, so and we looked at another, I think we have another graph here that talks about the different areas of where people are buying. So explain that to me here.
So you know how we were talking about there's no Markhams, there's no Bramptons and everything else, and everyone thinks that the condos are all in the core. Yeah, there's a lot of activity in the core, but if we look at South Etobicoke, we look at Scarborough, and we look at other places like in North York, there is a lot of development, sometimes even more than downtown. Look at North York by Yonge and Finch and Steeles. There's a lot of development there. There's a lot of development north of Scarborough. So it shows that we're branching out. We're going away from the core.
And that's because when you don't, I mean, there was just a recent meeting, obviously, that came up with the committee of the green space.
Yeah.
And so, maybe I think a lot of people thought that, it would shrink and developers could build more, but it actually, the protected green space has expanded.
Yeah.
Right? So we actually can build less, residential homes and so on and so forth. So we really can only build up.
Well, yeah, you could build a lot less townhomes. You could build a lot less detached and semi-homes. It's all going to be from apartments.
Yeah.
Yeah. So that's what I mean. We're finally growing up. We're finally becoming in the same league as Hong Kong, New York, where everyone lives in a high-rise.
And one of the things, Brian, and correct me if I'm wrong, again, we're different than anywhere else in the world, generally speaking, where, again, when you see the cranes, it's for product that's already sold.
Yeah.
The developers don't build unless they're 70, 80% sold out, whereas if you go anywhere else in the world, you have to build first and hope to sell. Is that correct?
So that's why people are always saying these see-through towers. Like seminar people from the States are always talking about, look at Miami, look at New York, because financiers, people that give money to builders to build towers, hundreds of millions of dollars, they say, hey, we know you can make the most money when you actually have someone where someone could turn the key and look at it. So we'll allow you to sell maybe 20% and then we'll give you money to build. But not in Toronto. I mean, not in Canada. They have to pre-sell $100 million to get $100 million from the bank to build a tower.
That's a great problem.
Yeah, it is.
That's a great, it might be a little bit hard, but it's good. It means that we're not going to build unless we've already sold the product.
Exactly, and that's why we have the system set up where investors buy at the beginning to allow people later on down the line to be able to get a condo down the line when they're ready to move. Because first-time home buyers are just not going to buy always pre-construction. They want to see something when they're ready. They want to be able to put their money down onto it. Yeah. So investors come in, they provide a service to the market, so people come in, they buy it from the builders so they could get their money to build, and then the builder really makes all their money on the last couple units that they sell when people could walk in with a hard hat.
Well, I'm looking forward to having Denny, come on after this break here, and then Sonia as well. And we're going to learn how they're making, well over 30% on an annualized basis buying condominiums, downtown Toronto. Brian, a lot of people say, Rav, isn't it over? I mean, it's been almost 20 years. I mean, the last biggest crisis, if we don't count 2007, a few months of a hiccup there because of, what happened in America. The last crisis was what, 89, 90? Was that kind of the last one, really?
Yeah, since it's only since the Toronto Real Estate Board tracks all of this data, there's only been that one, and then it's kind of going up. It's kind of exponentially going up right now.
So that was like 25, 26 years ago.
Yeah.
So what are the fundamental factors, Brian, that really make our market strong? What are a few of them that you would say?
Absolutely. I mean, we're still creating jobs. We're still...
And that's huge. That's number one.
Yeah. So
right? The economy has to be good.
Exactly. So people have to be able to service the debt. So they buy a property, they get a mortgage, they have to have the ability to service the debt. So we have to look at the things. Okay, are there going to be people coming in? Well, 16,000 Syrians came to the GTA. That means about, let's say, 4 in a household. That means 4,000 more units that need to be built to be able to service it. We're not building enough to be able to satisfy that. So there's people moving in. Yeah. Jobs are being created. I mean, our economy is doing really well. And another thing is, remember I told you we're growing up, we're starting to get known internationally. Because of that, a lot of people in not so great places want to build roots here, and they want to buy real estate. That's the first thing that they do.
That makes sense. So there's a lot of people that there's immigration, people moving within Canada to the GTA because there's the job situation there, and then there's a lot of people abroad that are moving into the GTA.
I mean, Drake is doing a real good job of selling the 6. A lot of people want to come here, but it's not just Drake. I mean, we're getting the all these magazines, Economist, Forbes, everyone, Conference Board of Canada, all these different places, the UN, all talking about how great Canada is. All these city rankings are putting us at number 2 and 3 and everything else. So we're starting to get a good brand. People want to be here.
Yeah. No. It is exciting.
Yeah.
It's funny, it's usually the people that don't like their own backyard, right? Everybody else likes it from afar, but it's us who live here.
I mean, we look at our problems, look at the traffic, go to Markham to Brampton, it takes 2 hours, but people are like, oh my God, I get to go and the police don't pull me over and put me in jail just for being brown. I mean, these are great things that we have. And
I'm laughing, but it's true.
Yeah, I could go to Brampton, get sushi across the street, get Italian food, and go get Indian food in Brampton of all places. You can't do that in a lot of places.
There you go. That's right. I'm not moving to the States. I've decided. You've convinced me to stay here, Brian.
Yes, please. We need you.
That's exciting. And I love talking to people, as our guests come on here on the show and just learning how they're making money in real estate. It's really not that hard, is it?
Yeah.
talk about what would you say is the number one thing that we need to be able to jump into this market? I mean, I already know what you're going to say. It's education.
For sure.
But you told the story, what happened to 30 seconds before we go to break, you told the story in the beginning of the nightmare property that you had. What did you do?
Well, I mean, I think the biggest thing that people need to look at when they're looking to invest in real estate is, there's problems, there's risk and everything else, but have a plan on how to deal with it. It's very simple. I mean, when I did it, I didn't have a plan, but thank goodness I was investing in a growing market. It saved me. You
sold it.
I sold it, made money.
And you made money on it.
Yeah, so I didn't know this. I didn't study the fundamentals. I just jumped in. I wouldn't do that again.
Yes.
Study the fundamentals. Go in a growing market, then you'll be safe.
Yeah. Well, thank goodness for that real estate is very forgiving.
Yes.
Yes. We're talking to my good friend Brian Persaud. We're learning how to make money investing in the condominium market. You don't want to go anywhere. We've got a couple of guests teaching us how they're making over 30% return on their investment. Thanks for watching, everyone. Did you know that new condo sales are more popular in the 905 than in downtown Toronto? New condo sales in the suburbs are at a record high. It's nearly double the level from a year ago and beat the previous high in Q3 of 2011 by 16%. Hey, it's Rav. Welcome back to The Everyday Investor. We're with my good friend Brian Persaud, but we're also talking to Denny Reis, and we're learning how he's made money investing in the condominium market. Denny, it's great to have you on the show.
Absolute pleasure.
So this property here, this is your latest purchase.
The latest purchase, yes.
Yes, and when I say latest, it's your 8th purchase.
This is our 8th, yes, exactly, and always looking to expand.
That's fantastic. And so when you say us, you and your wife?
It is my partner, Cal Catan. Yeah, we've actually just, we've come together both romantically, but we're also business partners as well, and we've come together and produced Executive Suites Toronto. We're basically looking for money partners.
Yeah.
And we've got a plan, it works, and hey, we're just running out of money. I guess at this point we're looking for people to help us out.
Well, we always do, Brian. I mean, that's normal, right? You get into the investment game, and then you start doing what we call joint venture agreements, where I remember, I would do the work and somebody would give me the money, and it was a wonderful thing,
Yeah, absolutely. When I first started out, I would always be so enthusiastic about real estate, tell people, okay, this is what you do, here's my knowledge and stuff like that. People are like, oh, can I work with you? And then it just kind of happens from that. People see you're successful, and they want to, be a part of that.
Denny, I used to be a real estate broker way back in the day, and I would encourage my friends and family to get into the market. But, for whatever reason, they were gun shy, right? Media, nobody was watching the greatest show on TV. Nobody was watching that one. Now they are, The Everyday Investor. But they're watching other shows, and they were having nightmare stories and seeing all this kind of stuff.
And Toronto's this big, scary place too, right? If you don't know it, it looks very intimidating. It's very fast-moving, and if you don't have that network of people that can guide you through, my gosh, I wouldn't jump in.
So what I did with them is I said, okay, listen, I'll do all the work, you give the money, I'll take care of everything, we'll split it 50-50, but after within 1 year, you can rip up the contract.
That's right.
Almost every single person ripped up the contract and then wanted to do more, because it's really just that first hurdle, right? Once you get into, wasn't the first one the scariest one, but then everything after that?
Absolutely. It was that domino effect. As soon as we got that first one under our belts, it just seemed like, well, you know what? Why are we even stopping at doing the next one? Let's already think about the next two, the next three. So one property became 2, became 4, became where we are today, 8, and so on and so forth, right?
Okay, so you and your partner, you've done 8 together, and now you are helping other people do it. They're helping you, you're helping them. It's a win-win by kind of a joint venture strategy. And Brian, on the joint ventures, because you've done many, you have many partners, different partners in different even areas of Canada where you invest in real estate with them, business partners. How do you do that legally? What's kind of the setup?
So usually, because I was in university at the time, I didn't have the ability to get mortgages. So I would put the partner, the money partner, have them qualify for the mortgage, have them put the property in their name, and the lawyer would put something on title saying they can't sell it, and there was this agreement in place that would be registered with the title. Yeah.
So that's how you protected your interests as well. That's right. And that way everybody's protected.
Exactly.
Okay, great. Okay, so Denny, let's take a look at this property here. Fantastic. So this property you acquired when?
So this was the fall of 2015, our most recent.
Okay, so just 4, 5, 6 months ago.
Exactly, yeah.
And this property is located?
This is at 80 John, so it's better known as the TIFF building, right at the corners of King and John. I mean, it doesn't get any more downtown than this. Exactly. Entertainment district.
Yeah.
We're talking like half a block from Bay Street. The doctors are all around us in the surrounding hospital, so it is epicenter of everything rental.
Fantastic.
Yeah.
So you know what's funny is I imagine this property is 500, 600 tops square feet.
That's exactly it. You got it.
600 square feet. 600 square feet.
Yeah.
And a lot of people will be like, who wants to live in that?
Yeah.
Well, a lot of people want to live in that downtown Toronto. It's convenient.
That's right.
It's not like we have to buy 1,000 square foot, 1,500 square foot for, first of all, who can afford it? But a lot of people don't want that, Brian, right? They want the smaller units.
I mean, in a world that we're looking at things at price per square foot,
Yeah.
1,000 square feet is going to be really unapproachable by a lot of people. So, I mean, they're going to want a condo and use downtown as their living space, their entertaining space, workout space, and just come home and sleep.
And you have an interesting strategy because you buy these condominiums and you furnish them.
Absolutely, yeah. We make it a premium suite at this point. And I think you guys nailed it earlier on. Our clients are generally people that don't even live in Toronto. We're talking professionals, or we're talking medical practitioners. They come to the city because they're here for work. So generally speaking, they don't bring their families. They need a small space that is very close to their place of employment.
That's great for you because less wear and tear.
Absolutely. Half the time they're there Monday through Friday. They take off to be with their families on the weekend, leaving our utilities to basically zero. Yeah. So the expenses are dropped. The model works. It's a fantastic way to look at it for sure.
Okay, so the purchase price on this property downtown Toronto was
$420.
$420. Okay, so you paid $420,000.
That's right.
For this property.
That's right.
And as an investor, once in a while there's creative ways, legal creative ways that we don't have to put 20%, but did you put 20% down on this property?
In this particular case, this was a joint venture. In this particular case, the partner that we went in with actually was able to put in 24%. It wasn't needed, but that ended
a little
up
bit more money.
Exactly. So you know what? I mean, our numbers are going to be skewed in a very positive fashion as a result. But so we put 24% being the 100,000 basically.
Okay,
just about.
So 24%.
Yep.
Of the 420, so you put down 100K?
100K, yep.
Okay, so 100K for your down payment, and then we have some closing costs there?
Yeah, and it's generally, our rule of thumb is about 4% of the purchase price, and in this particular case, it was just about $15,000.
$15,000 was for closing costs, and not always, but sometimes in the condominium market, we do some renovations, some lipstick, some painting and carpets and all that kind of stuff. Was this pretty much turnkey, or did you have to do some work to it?
No, this is turnkey, absolutely.
Turnkey.
I mean, it is a shishi place. It's ready to go, lavish finishes, that sort of thing.
Nice.
The only thing we added, as you remarked earlier, was that we furnished it. So we came in, we added about $5,000 worth of grade A furnishings, some nice artwork, some good finishing.
That's it, $5,000.
Well, in this case,
I guess it's 600 square feet.
Exactly, and in this particular case, we've already got an inventory of furniture that we've been acquiring over the years, right? But what we generally do with our joint ventures is it's 50-50. We want to show that we got our skin in the game as well, so we'll spend half of the required funds to furnish it as well.
But the total was $5,000.
$5,000 in this case.
$5,000
exactly.
to furnish it.
Exactly.
Okay, so that's it, I assume?
That's it.
Okay,
That's
so
it.
you are in for your investment.
120.
Your investment amount is $120,000.
Yeah.
Okay. And again, Brian, this is not. I mean, this is Denny. We're going to call it out of pocket, but you've got 7 other properties. You take from this property, that property, credit line, which would make your returns astronomical. But even if this was out of pocket, you're in for $120,000.
That's right.
Okay, great. So we are going to make money a few different ways. What's the first way that we make money on this $420,000 purchase, but I'm only putting down $120K? What's the one way that you've made money?
Cash flow, cash flow, cash flow. That is absolutely quintessentially the most important thing for us.
So define cash flow.
So with cash flow is essentially after all the expenses, do we have anything left over?
Okay.
So rent minus expenses.
And we should. Otherwise, it's not
worth it.
Not worth it unless you're going to because you want to be out of pocket. Now, I have heard, Brian, that people have invested in areas where they just feel like it's going to go up astronomically, and they don't mind being $100 cash flow negative. What are your thoughts personally on that?
I mean, it depends on where you are. And if you're a doctor, you're making a lot of income. The government Canada is taxing you 56%. You might as well put it in a property that you could use to hang out with, and so you own it, and you'd be able to write off that against your income.
But generally speaking, we want to be positive cash flow.
Generally, yes.
Okay. So how much money are we making cash flow here?
So at the year mark, we're roughly 12,000. So
12,000. So you're getting $1,000 a month
exactly
on one property.
Exactly.
Wow. Fantastic.
So that's basically taking into account a monthly rent of approximately 3,200.
Yeah.
Which is also about half the price of what the big companies are offering. This would be like the Dell Suites, the big companies that offer the furnished suites, which is still about a third the cost of what the hotels would be charging had these customers or clients, whatever, go in and do the hotel rate.
So there's a
so this is a deal. This is a crazy deal.
Absolutely. So the demand for living in one of these, you're making, $1,000 a month. You have seven properties. I mean, if they're all like this, that's not bad. $84,000 a year, 7,000 times 12 months. That's great. Congratulations.
Thank you.
So we make money cash flow. Obviously, this property increases in value, right? So passive appreciation. It just goes up naturally.
That's right.
What do you give yourself for that?
I would say we're very conservatively saying 5% a year. Now, we're not into the speculation aspect of things. This is kind of the icing on the cake for us. But I would say 5% is a safe bet.
And it's been higher than that, right, Brian?
I mean, I always, having a general overall appreciation rate for an entire town doesn't really help Denny in this. You want to see what his particular unit is going up in value. And in this building could easily be 8% for that particular
But he's being
unit.
conservative.
5%
we're using. We're using 5%. 5% of the 420 is what, 20,000 something?
Roughly, what do I have? I got 21,000 here.
$21,000. So you're making that on just the increase, and then of course somebody is paying off your mortgage.
That's right.
So our mortgage pay down is what?
So we're talking just the principal pay down is the $7,500 per year.
$7,500.
That's right.
That's great. So if I add these three numbers up, I've got 33, 40. What is that? 40,500.
Just under 40,000.
40,000.
39,000. Yeah.
$40,000. So if we take this 40K and we divide it by, so what you want to always do is we always want to take our profits divided by our what we're in for, and that looks like 33% to me.
Bingo.
Right?
Bingo.
So you are making an ROI of 33%. So basically, you're doubling your money every 3 years.
It's got a nice ring to it, eh?
Yes, that's fantastic. And this is your eighth property, so you're just continuing continue to do this. I'm going into the eighth. This is your seventh.
I'm a big fan of your show. I've heard about other percentages in the past, ROIs of like 500%, 1,000%. That sounds fantastic. Generally outside of Toronto. But I've got to say, like with being in the condo market downtown, there's certain things that we don't have to face. Vacancy, for example, we've had 0% vacancy. You put this up for advertising, whatever, boom, it's rented within a week. And that takes away any of the stress. These are brand new buildings. The management is almost to a nil. They're brand new suites. We're dealing with clients that are professional. They're not here.
Rates are non-existent.
Exactly,
so you get to pick and choose who you have in there. So you're going to get the best quality people in there.
And this was a resale.
This is a resale,
This was not, you didn't buy
pre-construction,
wait the 3-4 years. What are your thoughts on that, Brian? I mean, we already kind of looked at it. Today, resales are even cheaper than pre-con. But what are your thoughts on
well, in Denny's model, it won't work because he's looking for specific locations. There's specific buildings that are really targeted by people that would want to rent it, or he could make $1,000 a month. In addition, I mean, Denny, your price growth of 5% per year, let's say if that wiped away, you're still doing better than any mutual fund or anything else at like just under 15%. So if there's no price growth, the 21,000 is not there, he's still doing really well on it, just on cash flow and mortgage pay down.
It just sounds like, it's fairly easy. These numbers look really great. Even right now, I'm standing here going, wow. But, I keep forgetting about the heartache that's involved in it, though, too. Like, there are bidding wars in Toronto. The primo locations are very difficult to get. And this is, I think, where, I'd like to think my partner and I have some expertise now, how to get into that game. It's tough. I mean, like, there's bidding wars all over the place. You see something really good, well, there's going to be 5 people lined up already with their offers in front. And obviously, we don't want this number to be ballooned any more than it has to. But once we're in, it's like that low-hanging fruit that just you have to reach out and grab it, right? At that point.
And there must be some clever strategies that you've come up with now. Maybe you put a posting, hey, if you're thinking about selling, call us, and so on and so forth. But it's listen, when somebody watches a show like this and they see what you're doing, of course there's going to be bidding wars because everybody wants these kinds of properties. Well, listen, Denny, this is very inspiring, and congratulations.
Thank you,
it's always great to see. young guys like you, doing well, making money, and good luck to you.
I appreciate it. Thank you.
Thank you so much for coming on the show.
Thank you, Rav.
Keep in touch and let me know what
Pleasure.
you continue to do.
Thank you. For sure. Absolutely.
We've been talking to Denny Reis. He showed us how he's basically doubling his money every 3 years, not stopping anytime short. We're going to listen to Sonia, how she's doing the same thing. The Everyday Investor is going to continue in just a moment. Thanks for watching. Did you know that we are currently at record sale levels for new condo sales? Activity soared by 33% year over year, despite a 14% decline in new project launches from last year. Hey, it's Rav. Welcome back to the Everyday Investor. We just learned from Denny Reis how he's doubling his money every 3 years in the condo market. Now I have Sonia on the show. Sonia, it's great to have you here.
Great to meet you.
Thank you so much for being on the show. And it's incredible what you guys are doing. We talked to Denny, Brian, about 600 square feet, and that seeming small, and who wants to rent that? But Sonia, you can beat Denny here.
Yep.
You just purchased a property how long ago?
We closed March 21st.
You closed March 21st.
Yep.
How long did it take you to get a tenant?
A week.
1 week.
Yep.
You got a tenant, and you are making some money. Now, this suite is not 600 square feet. It's not even 550. It's not even 500 square feet. How big is it?
400.
400 square feet.
Yep.
And people are renting this kind of product downtown Toronto.
Young professional just starting out.
Wow.
Rav, a basement apartment in that area is going for $1,200.
Wow.
Yeah.
And so she's got this, and what floor is it on?
The 6th floor.
The 6th floor, okay. And so you bought this property. What was the purchase price of this?
$247.
$247. So you can still buy properties for under $250,000 downtown Toronto.
400 square feet.
400 square feet,
Yeah.
but we can still get into the market.
Yeah.
Yep.
Yeah. So, and you did a little bit of lipstick to this. So I think we brought some pictures. Let's take a look at that. So this is, now I asked you before, this is the before shot. It actually looks like an after shot. So what didn't you like about this right here?
The pictures make it look really great, but it was very, very dark in there because there's a very dark color on the walls.
Okay.
So it kind of felt really closed in.
Okay, so what'd you do? Let's look at the after shot here. Wow. That's nice. So tell me what you did. Looks big. Doesn't look like 400 square feet.
No, it's we brightened it up, but really light gray color, changed up some lighting, made it a bit more urban looking. And
Okay, what else? Very nice.
so we staged it so we could get, we could look good and get a better quality tenant in. And
So it's not furnished, you just staged
It's
it to get the
staged.
tenant.
That's right.
And then, it's got one of those kind of throwdown beds. What do you call those?
Murphy bed.
Murphy bed.
Yeah.
Okay.
So that's all
Wonderful.
your storage. You got your dresser. You got your TV up top. You got some cabinets.
Yeah.
Yep.
And this is for the person, Brian, who's renting this? This is for the person, like she said, young professional, doesn't want the commute, wants to be able to walk to work or take a quick subway.
Absolutely. I'm seeing it over and over. A lot of people are giving up their driver's license. They just want to be close to work where they could bike, walk, or take TTC.
Yeah.
It's right on a streetcar line, so it's always going to be in demand.
Yeah, and it's back to what we talked about before. Toronto's happening.
Yeah.
This is the place to be, right? I mean, I'm
Yeah.
talking worldwide.
Yep.
And so to be able to, go check out the Jays or the Raptors or Let's Go Raps, or the Leafs or whatever it may be, it's nice to be able to live downtown, to work downtown, to do those kinds of things. Now, this is not a family of four that's renting this. This is a single. Single professional.
Yep.
I think that is absolutely fantastic. And what I am surprised about, regardless of the square footage, that I can get into the market downtown Toronto for less than $250,000. So let's take a look at the numbers here. So you purchased this property. What was the exact purchase price?
$247.
$247. So we bought this in Toronto for $247, and you did this just a few months ago.
Yeah.
So we can still do this today, Brian.
Yeah, absolutely. There's a lot of properties under $300,000 in the core.
Okay. In the core of Toronto. Okay. So we bought this property and we have to put a down payment. So how much did you put down?
$49,400. 20%.
20%.
Yeah.
So you put 20% down, which equals
$49,400.
$49,400. And then was that including closing costs? Or do you
No,
have
closing costs were $7,600.
closing equals $7,600. And then you said you did a little bit of lipstick we call it, you know, just a little bit of whatever, some paint and some staging, all that kind of stuff that you did originally. How much did we spend on that?
$500.
$500.
That's it.
That's it. Okay. Anything else?
Nope.
Okay, so if we add these numbers up, what will that spit me out?
57,500.
57,500. Okay, so 57,500. So that is what you're in for.
That's right.
And again, Brian, I mean, this might have all come from a credit line where we pay, 3% on.
Yeah.
And so really she's in the deal for nothing.
Absolutely.
Her return is infinite. But, let's say that this is cash bank money kind of stuff. So you're in for the deal for 57,500. And so in real estate, we make money a few ways. It goes up in value. We call that passive appreciation. Just passively, this is going to go up. And so what did you use for that number?
5%, so 12,500.
5%, which again is pretty conservative for downtown. So that equals what?
12,500.
12,500. And then there's somebody paying down my mortgage.
So that's 44.85 a year.
How much?
44.85.
44.85
for the principal.
For the principal. So somebody's paying down my mortgage about $400 a month, just shy of. That's what gets getting paid down.
Yeah.
The rest, goes to garbage or interest or whatever the case is. But hey, if we're making a return, we're making a return. And then we got some. You did something to this, right? So you put in $500 there. What would somebody tell you that a guy like Brian would appraise that? I mean, it went up.
We got it for just slightly under market, which was about 250 to 260 was fair market. It was a willing vendor who was relocated out of province.
Oh, good for you.
So I'm averaging about 250 with the 500 I put into it.
Okay.
Yeah. On the low end.
2,500.
Yeah.
$2,500. Okay, so just we forced it on the low end because you're saying it's really worth about 260, 270 right now, but you're going to give yourself.
I'm being conservative, yeah.
Conservatively, you're saying 2,500.
Yeah.
Well, that's great. I mean, it's always nice. I mean, a lot of times we say, Brian, we teach that we make money on the purchase.
Well, I mean, she was prepared. She had all her ducks in a row. She knew what the value was going in, so she was able to act. A lot of people like, well, I don't know, can I get it for cheaper? And then someone else comes in and
a lot of
regret
people
it.
and a lot of people would say, yeah, this is too dark.
Yeah.
But Sonia saw past that and said, yeah, well, we can do something to brighten this up.
Absolutely.
Okay, so forced, and then cash flow?
It's zero.
Cash flow is zero.
Yep.
Okay, so that's interesting. So really what we're saying is that we're making money by it naturally going up. Somebody's paying down my mortgage. I bought it cheaper than what the market value says, and you're happy with that.
Yeah.
Right? We're not quitting our day job today. Mm-hmm. This is your first property?
Yes.
Yeah, so we're not quitting our day job, or we may never quit our day job. This is not necessarily get into real estate and give up your day job. You may love it. There's a lot of people that love going to work. They feel purposeful. They feel benevolent. They feel like gratification, all that kind of good stuff. So you're not looking for any cash flow. Thoughts on that, Brian?
I mean, it's a momentum builder. You're going to see it. You're going to make some money. It may go up in value significantly over the next little while. You refinance and get a cash flowing property, but it gets you in the door, and you're like, this is easy. And that mental weight off your shoulder of just doing that first one is all you need to be able to build that momentum to get 3 or 4 or 5 in the next 6 years.
Fantastic. So we add these numbers up, and what do we have there? 12,500, 44,885, and 2,500.
19,485.
19,485. 485. So that's how much we're making. We're making about $20,000 on our almost $60,000. So it's the same as Denny. We're making, what does that spit out to be? About
34%.
34%. So what we want to do is we want to take this number and divide it by this number, and that spits out 34%. Annualized. Annualized. I mean, that's, listen, we're putting a dollar out there, and we're getting the dollar back plus 34 cents, if you will. But we're not going to take the dollar back. We just want 34 cents every year. But this number grows because as we continue to pay down mortgage, as it goes up passively, the purchase, this is not 250 anymore. Next year it's 270. and so on and so forth. So as it continues to build on each other, we make more and more money.
And it's simple. I mean, it's repeatable. She could do it time and time again. Do you have problems managing the tenant?
No, we
Yeah,
haven't heard once.
I mean, I own condos. I haven't seen it 3 or 4 years that are in this location. You just don't see. You just don't get any issues.
You know, a lot of people think that, you know, there's just, you do this and this is all, but there's many different vehicles. I mean, hence the show, right? We have different vehicles in real estate, whether it's land development, whether it's investing in mortgages, whether it's investing in real estate investment trusts, triplexes, duplexes. What are your thoughts? Do you like this niche, Sonia?
I really like condos. Yeah, we just bought another one a month later in about 10 minutes for pre-construction this time on the other end of the city, down in Corktown.
You have two investment properties.
Yeah, this was the first one.
Yes.
But the other one's pre-construction, so.
Okay. And that'll be ready when?
2018.
2018, and how many square feet?
555.
555, look at you.
We upgraded.
Yes.
Yeah.
And what was the purchase price on that?
That one is 343.
343.
Yeah.
And Brian, 2018, a couple years from now.
Yeah, absolutely.
You know?
I mean, it's a new area, so the area that you bought in, it shows she's really going to be setting the higher watermark. But what you're going to find is that everywhere else is starting to go up in value significantly, and people are going to be forced to live in this neighborhood at a new price, a new high price, whatever she sets, because it is a seller's market right now.
And you're not buying this to flip it.
Nope.
You're buying it to tenant it out.
And I possibly do the executive rental as well.
And do the executive
Yeah, because this one's going to be 1 bedroom.
Okay.
Yeah.
Oh, it'll have a bedroom in it.
Yes.
Nice. What were you, sorry?
So I find that most people are just doing a pre-construction. It's like a forced savings plan. They don't have 20% down right away. They can put it down over time, which is really attractive. And if we look, tenants, they always prefer properties that are less than 4 years old. So when this is ready, I mean, it's going to be highly demanded by tenants.
Congratulations. That's fantastic. So we've got two under our belt here, and you know, anything like what is your strategy? You want to continue to do as many condos as you can, and
Yep, we'd like to. Right now we're single income families, so the money's going to stop eventually. So yeah, we're going to be looking at joint venture agreements as well. We're close to the city, so we can take care of them and go from there.
Sonia, listen, very inspiring. Thank you so much for coming on the show, and please keep in touch with me and let me know what else is happening.
Yeah, perfect. Thank you.
Thank you so much.
Good job.
We've been talking to Sonia and learned how she's doubled her money every 3 years. This is what she's going to be doing, investing in the condo market. When we come back, we'll have some closing thoughts from my good friend Brian Persaud. Thanks for watching, everyone. If you have any questions pertaining to this show, or there's a topic that you would like covered, please visit www.rogerstv.com. Hey, it's Rav. Welcome back to The Everyday Investor. We've been learning how to make money investing in the condominium market. If you've missed a show, make sure you go to Rogers TV and find out when the repeats have been. It's been a phenomenal show. Brian, it's great having you co-host with me. Thanks for being here.
Yeah, absolutely.
You know, listen, we Denny, Sonia, I mean, these guys are doing some really cool things. But this is not an anomaly. These are just typical real estate returns that really boggle your mind if we spend all our time, you know, in the RSP world, if you will, or, you know, securities or whatever the case may be. There's a lot of money to be made in real estate.
Absolutely. But, I mean, they were good. They got good guidance. They picked the right projects. I mean, I just finished a giant spreadsheet comparing every single building in the city of Toronto. And even though we've been this great bull run, there's actually buildings that have actually decreased in value from last year. So
we got to know what we're doing.
Yeah, exactly. So you got to know what you're doing.
Yeah.
You got to run the numbers. You got to be able to ask those 4 questions to get some good advice.
Yeah.
But I mean, the amazing thing is that they're everyday people. They're solid singles or doubles that they're getting. They're not trying to hit the home run and get 100% return every year.
Yeah.
So it's really, really duplicatable. They could do it again. They could do it next year.
So what would, as we close the show here, you know, time flies when we're having fun, Brian. I always appreciate you being here. You know, we got a minute or two before we go to break. What would be your thoughts to the viewers at home that are watching when they see this? I mean, you gave some great prudent advice. You have to know what you're doing because you can lose money.
Absolutely.
But on top of that, what would you say?
I mean, what we saw is that everyday people were making a decision to be able to get an investment property.
Yeah.
And they were able to do that because they just were able to get in and made a decision that they're going to do this. And once you do it once, a lot of momentum's built. So what I'm suggesting is that if you're thinking about it and you're okay with 20-30% returns per year, which everyone should be, you just really need 3 properties to be able to retire really comfortably. They're going to be able to give you cash flow 20 years from now. They're going to be paying all your expenses, and really, you have to depend on yourself to retire. What great way of doing it in real estate in a city that you love.
And this is for I mean, that's a great point. This is for the long run, right? We've got to be able to look, slow, boring, steady.
I mean, what they didn't do is rush off to Florida, rush off to Costa Rica, went to a seminar, but did something exotic. They just did the bread and butter, something local that they could drive by. I mean, it's not going to go up the most. I mean, we're seeing single detached homes go up 20% in certain neighborhoods, but at least they could sleep. They know that they're not speculating. They're relying on the tenants paying down everything. I mean, it's really easy. I mean, how much more easier could it get?
Yeah, no. I think it's absolutely fantastic. Thank you for being here. You're a busy guy. You're helping people with their investment portfolio's. You're on TV, you're on radio, you're writing books.
I mean, I wrote the only book on this condo investing stuff.
It's the only book that exists.
Only book.
Investing in condo. What's the title? Investing in condos?
Investing in condominiums. It's on Amazon, so you can take a look at it.
If people want to get a hold of you, they can go to your site. And,
absolutely.
Well, listen, thank you so much for being here. Say hi to the lovely Sabrina. And we have to have you over soon.
I'm excited.
Yes.
It was so much fun. Thank you so much.
Thank you so much for being here. We've been talking to my good friend, Brian Persaud. We've been learning from him. We've been learning from Denny, from Sonia, how you can make money investing in the condominium market right here, even in your own backyard. On behalf of Rogers TV and myself, Rav Toor, we'll see you next week, same place, same time. Honey, I love you. I'll be home soon. Ciao, everyone.